James Hirechek with this week's Autochartist weekly Forex futures and indices weekly recap for the week ending November 3rd. We started out the week looking at the USDCAD. On the 30th of October, Autochartist had determined that the US dollar Canadian dollar Forex pair was going to show signs of weakness. So you can see that we did see a general downtrend most of the week, starting up around this October 30th time period, off of this high at 10019. So the market did reach some kind of parity, and now it's working back below it. And we did see some strong action in the US dollar on Friday. They may have temporarily stopped this decline, but we'll have to see if there's some follow-through. But right now, the USDCAD is still showing signs of weakness. Could correct into this 98-95 area over the near term. Then later, as the week progressed, we shifted our focus to the New Zealand dollar. What we saw here in the New Zealand dollar on the 31st of October and November 1st was you saw this breakout through the resistance line. This is a very strong move based on the size of this candlestick. And it came off of the traditional triangle chart pattern, the one where you get a sideways trend and the compression of these support and resistance lines, and you get all this pent-up energy that leads to a breakout. This should have been enough to hit the target at 82.98, but buying dried up as we approached the 82.83 area. Now we're drifting sideways to lower. It looks as if, since this was a momentum play, that all this momentum has kind of died down. So we'll have to reassess the New Zealand dollar, US dollar next week to see if we get a return of that same buying interest. And then finally, to end the week, we had a breakout in the US dollar CHF, or US dollar Swiss franc. Again, it came off of a triangle chart pattern, not quite compressed as the Canadian dollar was earlier in the week, or the New Zealand dollar. But nonetheless, we did get a breakout above resistance and above a couple of tops here. And now we're headed towards the 94.23 target price. Now, a lot of this action took place because of the bullish U.S. jobs data that sent traders into the U.S. dollar, and that helped get this boost here. So it could have been a one-day reaction. We'll have to see Monday if we get any kind of follow-through rally, but momentum traders should pay close attention to the action on Monday, because again, this is a momentum play on the 240-minute chart, and if that's as far as it goes, you don't want to take any heat on it, or you don't want to see a quick reversal back to the downside. This has been James Hirechek with the Autochartist weekly Forex futures and indices recap for the week ending November 3rd.